All right, what's going on, everyone? And welcome to another episode of the Market Misfits podcast. I am your host, Joe Pokeshiva, joined today by my Batman. I am Robin after what he pulled in the last 2 weeks with some of these wild trades that he's going to talk about. Smiddy, how you doing, bud?
Good, man. How you doing today?
Good. I mean, it feels good to be back. We haven't recorded in about I think just under a month, which sucks. I missed this, but I was on vacation, and then when I got back, I was so much shit to catch up on. I mean, I probably missed one of the wildest weeks in the market. We were previous to us, starting this recording, like I was talking to him and I was like, bro, I picked the worst time to go on vacation, probably of all time. I mean, we had a low of 48.35 on SPX, and then within 2 days, by that Wednesday, we were up 54.78. Like that's wild. And in that one day, we ripped what, 500 handles on SPX in a day with the 90-day tariff pause. Yeah. So that's unfortunate. I mean, it's easy to say in hindsight for me to be like, oh man, I could have caught that ride, right? It's way easier. But there is someone who is in the room right now who did catch that ride. And that's you. So I want to hear about it. I want to hear about it.
All righty.
I want to hear about this trade. Yeah. Break it down for me, because I know, I wasn't here, so I've heard a little bit from you, but I haven't heard the whole story. So let's talk about it.
Right. So, as many of you know, I've got a client down here that I run the book for. And it always makes the game more fun when you got two personalities trying to control the trades, right? So, for a little bit of disclosure, I watch Bloomberg. That's where I get a lot of my news. I don't run a terminal at the moment, but he's a big CNBC fan. He likes the Cartoon Network. So him and Josh Brown get down, and basically, we get the bogus headline. He calls me. I'm waiting. I'm fully content.
What was the headline? What was the headline?
We got the bogus. CNBC was the first to break the 90-day tariff pause, and that was Monday morning.
And then that shit just was bullshit, right? Yeah.
Yep. It the market, it was a head fake, right? Market ripped super hard. I think NASDAQ ripped, what was that? About, we were up somewhere several hundred points. I'd say 600 to 700 points by the time I get the call, and he says, load the ship. We get long 200 contracts a Dow, 100 NASDAQ, 75 gold. Immediately within like 7 minutes, we were down $1 million. And he's a good sport, so he kind of laughed it off. What a way to start the week. I found it much less funny. And we just held the positions, and into Tuesday, by the time we're near the lows, I was at a pain point of like, dude, we're down $4 million. I was ready to close. I think gold was still holding up actually pretty well at that point. Yeah, no. So we were fine on the gold buys. The gold buys were actually good. That was 30.62 is where we bought the gold. So I was kind of happy with that. But yeah, we held through, and then Wednesday, of course, actually caught the entirety of the move and the rally. So that was wild because, coming into the Wednesday morning session, I was pretty much at max pain. I'm like, all right, we've chopped off 20% of the account here. By Wednesday after the close, we had taken the account to just over the break-even point. So we were up, a couple $100,000, which felt insane because we've been riding off of a drawdown from earlier in the year. So that was pretty wild. I pushed to close everything and call it a day. But unfortunately, the two heads were butting there, and we ultimately held into the following Thursday. So that said, we did get out of the NASDAQ and Dow in the morning, which was fine. Actually went green on both of those trades by a decent amount, and I'll have to pull up the statement. But unfortunately, we had a little bit of equity. So we had a decent size in Meta, 30,000 shares long, and then same with Oracle, we had 25,000 long. So both of those took a pretty hefty chunk out of that money made back, which was a bit of a bummer. But again, you kind of didn't know what was going to happen. So we ended up booking, took all the losses. We did make a pretty penny in gold, got out of that around, that was 75 contracts, got out around 32.50, which of course, as we record this today, which is what, almost 2 weeks later, right?
Yeah, I forgot that part. I always forget this shit in the lead. It is today. We are recording on April 21st after the close, 2025. Just for anybody paying attention. So go ahead. Sorry, Smid.
Right. So yeah, gold sitting at 34.31 as of now in the futures. In hindsight, of course, would have loved to have held that. That would have been another nice chunk to the upside for us, but can't hindsight trade this market. So yeah, it was a wild week. I gotta say, like, the swing of emotions was pretty fucking crazy. Just to go from the came in Monday, just like, all right, I had some work, had a little bit of a hole that we needed to climb out of, but it went to a much deeper hole. And then Wednesday, it's like, the euphoria of making all of it back and then some. You feel like a fucking genius. That I felt like we got lucky. At that point, when I get that kind of lucky, I lick the dice, I send them, and fucking I get out of there. So that's what I do at the casino. These guys have seen it in person. But yeah, so kind of tough to give it all back. Not all of it, but tough to give a lot of that back and still be in this point of like, like I said a few weeks back, it's a tough market, man. This is not, we haven't seen anything this crazy, VIX this elevated, these types of intraday moves. We just haven't had going back to COVID, which was really short-lived in the grand scheme, and even looking at the daily ranges, right? If you look at your ATRs here on NASDAQ, we're sitting at, 800-900 points intraday, which is huge. Great if you want to scalp, right? Tons of opportunity for making money. But I think you got to check your duration and, likely trade with pretty tight stops. Or what I've been doing is keeping it in the options market. So I feel a lot better playing these overnight moves with calls and puts on the indices just into tomorrow, so almost 0-day style. But today's a great example at the close with this nice little end of day rally that you caught. If you were still thinking we're going down, you buy the Qs at the close after this little run up, and that would give you a decent entry. And then, you see what tomorrow brings, right? If you get the gap down, more than likely you can manage to trade from there and be pretty happy.
What did you net? So with all that tariff week, right? I'm calling it the week of tariffs when I was on my cruise. But what did you guys end up netting out?
We lost 750,000
in total.
Yep.
Okay, so you dropped 750K. So you lost a bunch, then gained a shit ton back, and then won, and then brought it off, then lost some more when you guys were shooting again. Got you.
Yeah,
and that's a scratch.
We were down 2.5 million. I guess net prior to the big run up, we were down an additional 2.5 million. So I came in the week down 1.5 on the year. So it's like we went from down 1.5 to down 4, down 4 and change.
And just so everyone knows, how much were you guys? Because some people are not going to know,
Right.
I mean, some people might be judging you and be like, wow, this guy lost this much money. But how much were you up last year? 2024 P&L, where did you guys finish?
2024. I think up 7 million and change.
Yeah, I think it was like 7 million, right? Okay. So just so everyone knows, even guys that make 7 million a year are gonna not get everything right.
Yep.
But it's just crazy I can only imagine the emotion that you guys were going through, or you were going through during all of that. Because I mean, if you were on the opposite side of a lot of this, I mean, you saw it. You got hit, your face ripped off on the opposite side, and then you made your money on the right side, and it's just wild. Like, it's just a wild. I'm sitting here looking at my own. Like, I think I traded once when I was at a bar that had good Wi-Fi in the middle of the ocean, which was probably a bad idea. And I think I was trading one contract out of fear that I'm gonna do anything. I think I made $400. So it's nothing. It's nothing in comparison to what you made. But I was running on. Hey, what happens if the internet goes out and I'm long fucking a 10 lot of ES? Yeah. And then we reverse. I'm torched.
Joe,
so.
You made more money than I did that week, so good on you.
That's
400 is a lot more than losing 750.
Yeah, right. Right.
By a few
But yeah,
bucks,
yeah, you
right?
were right. So like, kind of what you're saying at the end there too is, if we're kind of looking at what's happened, right?
Mhm.
We've, I'm going to pull up my SPX chart here real quick. But if you look at what happened, we do that rally. Everyone now is I mean, at least again, when I say everyone's bold to the tits, I'm purely talking FinTwit, which I know is a horrible source of information, but like there is a good gauge on Twitter where I like to do the inverse of a lot of things because it just seems to work out that way. But I mean, you had a lot of signals after that, we had the rally, then a little bit of a relief, sell off the next day, nothing crazy, then just kind of chopping around in large ranges up until then, up until basically today. But if we take out today, for instance, um, you know, people were calling that was the bottom. That was it. We hit it, like we're going up. And I think we've talked about this ad nauseum, and we talked about it on the live stream with Ranch on Thursday before the market closed. I'm like, man, I've said it till I can't get excited yet. I'm still not there for longs. This, in my opinion, is still an intraday trader's market. Maybe you could play a couple of days, similar to what you said. Hey, you still want to have a short bias. Look at what I'm calling basically a short covering rally into the close, which is what I played. So like today, we just went down lower all day for those, paying attention. Again, it's April 21st. Just slow grind lower to like 3.5% down at one point. So at 5,100, I took lotto calls to 5,150, right? And they for a buck, and they ripped to a high of like $15. Did I get them did I close it at $15? Fuck no. I wish I did, but I didn't. I closed them out way earlier than that because again, they're lotto tickets and they're just decaying against me. But I was playing purely for a short covering squeeze basically into the close. And then if you were still bearish, that was actually a good spot to say, fuck it, I'm buying puts. Or if you were still bullish into like, we're going to have another bounce, we're going to have a little bit of a bounce day like we've been kind of doing, you could have bought calls, right? Like that, but that's it. I'm playing for the next day. I'm not playing for 6 to 8, 9, 12 months out. Because I can't. I'm not excited about it yet. But I'm curious, like, I think you guys were talking before about having a list of things you like and you might be dabbling in, but have you actually pulled the trigger, or are you pulling the trigger on anything from a longer term, position?
No, and if anything, I think that we're in a spot where if you wanted to be a little bit cheeky, you can start selling some covered puts, cash covered puts, and say, hey, I want to own, great example, right? I want to own Meta at 450. I don't know what they're trading out on the weeklies, but I think that that's a spot where you could say, you know what, give me the 450s. Let's see what a close to the money would be trading here. Oh, yeah, so 450s, 217 on the bid side. So again, you're taking a little bit of premium there and just put the money up and say, hey, if I get hit for 1,000 shares, okay, I'll scrape it for the week, right? And then I'll start building this position over time. And if you do that for the next several weeks while this actual bottom process takes place, you're going to end up with a pretty good spot. Do I think we're going to get 450 on Meta? I could possibly. I thought today when we broke down, below 482 from those lows on April 7th, I thought we were going to have a much bigger sell than we did. So a little interesting. You definitely saw somebody was nibbling because otherwise they should have really dumped out. But I think that's the strategy. You still have, implied vol is still jacked. So take advantage of the premium. Talk to a couple guys in the room who are selling covered calls on equity that they bought, which is another good strategy of like, if you're in it and you're kind of feeling like you're stuck and you're not willing to cut and just move on, then yeah, you start taking, again, flip the script and take the premium on the other side. You guys were talking about some crazy risk reversals today in the room.
Yeah.
Which I kind of caught half of. Yeah.
Yeah. It's tough. It's tough to kind of like, I like to look at what they do on an intraday basis on SPX and VIX spreads, right? Mostly just to see like, okay, are we getting close activity on line? And I just mark the lines down, right? Like I don't actually sit there and be like, oh, I'm going to tail this. Like it's just more of like, okay, these are areas of interest for other people. And I kind of mark them down. Today, there was, a bear risk reversal, basically, that's, looking to go below the 5,000 strike, right? So I was like, okay, that's an area of interest. And then you had a bunch of calendar put spreads with like a midpoint, I think, of like 48 something, like 4,800. So I'm like, okay, another thing I'm going to write down. Like these are just strikes I'm putting down to see what you know, if they continue, like if I start to see more and more of this coming in, like, okay, again, I don't know what they're doing. They could have a big ass book and this is a hedge. They could be trading around it. There's a bunch of shit. So I don't just take it as a de facto, I'm going to go do this. It's just, all right, what's interest? Because it happened in the flow too, right? So we were talking about it today on Wednesday of last week in the morning, right? Around like, I think it's like 8:50 my time, so central time. There was almost a $5 million put sweep that hit our board on SPY, the 506s. And that would follow it up a spread, someone that bought about $1 million of 508 puts. And where did we go today? Like within 2 trading sessions, we went to almost 508 to the fucking penny with room to go down, right? Like, so that's why it's interesting to me. You know, SPY and QQQ flow, there's so much of it all day. That's why I like that we got like a filtered board. But the only thing I care about is how much size. It has to be a good amount of size for me to be like, all right, this is interesting. Unless it's like an intraday, 0-day trade and someone's betting $1 million that we're going to go somewhere today. You know, I'm like, all right, these are May's. They were May puts, and sure. So it's the same concept when I look at the spreads. And then on VIX, it's more of like, what are when they start buying a crazy amount of VIX spreads, usually large size, deep out of the money. Typically, as we track them, they're usually right, like 90% of the time. And I'm just picking that number out of my ass, the percentage, so don't fucking quote me on it. But from my experience, they're like right vast majority of the time. So it's like, okay, I want to see when they start closing that. And are they going to start buying puts on the other side? Is that we're going to start moving in that direction? So anyways, but yeah, that's kind of what we were looking at least today.
Yeah, there's, we got a soup sandwich. We had someone in the room today getting pretty aggressive on those next week's SPY 500s. And he was looking pretty good. I don't know if you caught all that, Joe, but he was
no, I did not.
They were trading about 470 when I looked at them. I'm not sure where they closed on the day, but it was a nice little call out. And I sat and watched and was like, oh, that actually I kind of like that trade, 500's not too far off here. Yeah, so these closed back down 396. So again, interesting that I called out one of the call walls and was like, is anyone going to take a shot on a bounce here? It was early. It was definitely earlier than where you had. I
got ran over on the initial put wall, like the major put wall at 5,200. I got ran over on that one today. It just sliced right through, so I took a loss, playing that. But the pace of it, once I saw the tape, and the pace of it, I'm like, all right, they're going to hedge against this. We're just going to keep going fucking lower. So I ended up making it back on the flip side when I shorted. Again, I'm playing in short time frames, so I didn't like hold through this entire mess because it was slow. It wasn't even the pace of this was fucking exhausting, right? If you were trading this, like especially as someone who's more of a scalper or an intraday player, like it was exhausting. And then I saw you call it the 5,100, and that was my target. I'm like, once we broke 52, I put it in the room. I was like, my target to the downside, if they want to take it there. Again, it's all price action based. There's a big gamma magnet all the way down to 5,100. And it was just building all day on 0DTs on top of it being a larger gamma node. And of course, that's where we went. And all right, well, are we going to rip through 2 of them today when we're down 3.5%? That my thesis was no. Right? So that's why I took the lotto calls, because we didn't even get back up to VWAP any of the time. So I'm like, all right, that usually doesn't happen either. So my thesis now is, we're at a major wall. We already, sliced through another one earlier. It's been a slow grind down. Volume is shit. Liquidity is shit. Gamma's thin. If they come in and they want to buy this, I don't think that there's anybody really stopping them on a little bit of a bounce play back up. And we're still going to probably end the day over 2% down. And basically we got exactly that. Like that was, I'll give myself some credit. That was the read, and it was a good one. To play a lotto ticket towards that day, but it was slow, right? I took the trade at 150 central, and the payoff, if you held, I got out of it and I made a nice 3x, right? But if you would have held, till the end of the session through mock, which is always tough because you don't know what they're going to do, and mock was flat today, right? The payoff on that trade it got up to like $15. So that's a 15x trade. And you're probably going to get filled around $10, $11, when you go take this and you market your way out, because you ain't going to fucking get filled on a limit order more than likely, given how fast that shit was moving, unless it still had room to go up. But it's just insane, how that all happened. But it took till the last 10 minutes to get the move. Most people aren't going to sit in that. I only sat in it for a good amount of time just because I had free money to play with and profits for the day. Otherwise, shit, I would have been out on the first pop to 2x when I was sitting there like, oh, I got a 2x on it, $1 to $2. See you later. I'm out. Fuck.
I'm out of here. Yep. Oh yeah. I did the same with the SPX put spread I took for tomorrow. I rolled the Q's profit from this morning right into tomorrow. So it's same logic, dude. Just playing with house money at that point, so it's take the shot. If you're right, big upside. But yeah, man, people aren't going to play with it. The only thing you could have done different is to leave a runner, right? And sit there and say, all right, now the extra or excess profit, now you got one contract left, but even then it's hard, I have a hard time with that.
Yeah, and I think it would have been too if I was wildly profitable on the day, like I had a big day, then I would have just held the lottos until like through, and I didn't care if I lost all of it. But it wasn't, I had a good day, but it wasn't that good of a day, right? Like I don't. Again, for those that don't know how I trade, I like volatility. VIX over 30 is my best friend, because I can get fast moves and I can get my 50, 75, 100 points in NQ in 5 minutes. Today, slow grind lower. And choppy slow grind lower. Like if you're trading, I don't really trade with stops unless right off the rip because shit bounces around, but then eventually I'll put them in when I'm in profit, right? More as like a trailing stop down to like get out. But I probably had about 4 trades today that I was right, that I moved my trailing stop down on with the volatility. And I got paid, obviously. And then it just kept going in the other direction, right? Like it just kept going when I would have made more money, right? Which is, that's something that I have to deal with these volatile environments that it kind of piss me off. It's like, it's great to make that move, but managing risk, incredibly difficult depending on, how big your account size and what you're trading. But, anyways, this kind of leads into the bigger picture, right? So over the holiday weekend, I listened to a new podcast with our boy Cem Karsan, who me and Smiddy are big fans of Cem. I think he's very well spoken. I think he's very intelligent. Him and Charlie McElligott are probably like the 2 people that I listen to the most that are on the outside, right? That are not part of our crew. Obviously internally, Jay, Ron Schlucci, all have their own value. But when it comes to like volatility products and dealer positioning and gamma and all of that, nobody's better really in my opinion than Cem and Charlie. Like they're both excellent. So anyways, I was listening to his podcast and he had some, and I've seen the prediction. This isn't the first time I've seen it, but we've never really talked about it. And it's become, I think it's relevant now, given that we kind of popped, like, we popped a little bit back off the 90-day pause and now we're starting to sink again. But Cem is calling for a 35 to 45% drop in SPX from peak to trough. So from the high to the low of whatever it is. So if you look at the high of SPX, you do 35%. That puts you kind of, I think, at what? 4,500? Right? What was the peak?
I'd say 4,000. So if you go, if I'm looking right here, if you go.
So we were 6,150 was the top, right?
Yep. And then that 35 to 40%, puts you 4,000.
So 4,000. For 35% is 4,000, and then 3,500 is what you get for the 45, right? So it sounds crazy, right? Like for all that we've known over the last 2 years, right? 2023, 2024. That sounds crazy. But if you go look at a chart, like a daily chart on SPX, and you mentioned this to me actually last week, right? To get to 4,000, the last time we were at 4,000 was March of 23.
Right.
Like that's not that long ago.
The lows from October of 23 were sitting there at, 4140.
Yeah.
Right. It doesn't, when you put it in when you frame it in that lens, it doesn't sound that crazy. Right.
No, I think it's because the magnitude of the drop of what it would be and how fast it goes. I mean, if you look at the 3,500, which is the other target, like that is your low of 2022. Right back in what day was that? October.
You looking at October 10th? Yep.
It just shows you though how crazy of a run the last 2 years have been. And what he was really saying, and again, just for time frame on Cem's thing, like he's saying over the next year plus, right? He's said it won't be a flash crash. He thinks it's a slow death by 1,000 cuts bleed. with a lot of volatility in between. So you might get a 4% pop day, but followed by a 2% erase, 2% erase, 2% erase, and now you're negative 2% over 4 trading sessions, right? Like he's saying this is the beginning of a very drawn out bear market. I said bear market.
The old beer market.
Yeah, right. The old beer market. Hey, the beer market's doing great. And he thinks we're in the finishing the chapter 1 of like a 5-part story. As I believe how many chapters he said. So it's a really interesting note. Like, and I'm not trying to fearmonger anybody, but it's more of like, okay, that weighs on me even from a longer term perspective. Like I'm talking like 3-month trade, 6-month trade, leaps, right? As traders, like, yeah, this doesn't make me any more excited again to really get long. And if you talk about it from an investing perspective, you know, depending on how old you are and how close you are, like that could be a scary thought for a lot of people who might be close to retirement, right? Like that's a pretty significant drop.
Yeah, absolutely. And I think, you know, there's obviously when you get into the macro space, you start bringing in a million factors, right? And there's so many moving parts to that machine. But I think we're starting to see it. We don't think, we know, right? You're starting to see contraction across the board in PMIs and manufacturing numbers. Things are slowing down. The job market's slowing down. What happens then? You know, we just had a couple guys who laid off tons and tons of government employees, which, you know, love it or hate it. At the end of the day, those people were consumers and they turn around and they spend those paychecks right back into the local economy, right? So what happens when you take all that spending away? Well, it affects everything, right? Then your services slow down, right? What happens when you lose your paycheck? You certainly don't go out to the bar as much. Well, maybe you do, but you definitely can only do it, you know, a couple times a week versus every other night, you know, and that's where we're at, where I think you see that consumer slowdown is going to be much more pronounced. And what does that mean? I think Miguel Elliott put it really, really well. And I don't want to steal your thunder here, but
no, steal it.
You know, yeah, he basically said, let's see here. Oh, why am I? Here we go. Well, long story short, since I can't find the note, this is the second time I've lost it, Joe. I'm an idiot.
But, are you talking about his note? Not as, is it the Cliff Notes one that we have, or is it the one?
Yeah, just the Cliff Notes. So passing on tariffs to the consumer is lower demand and sales, or the other side is eat the cost. You get margin compressions to layoffs. So, and we could get a little bit of both. I think that there's enough room in that bowl for there to be, you know, both sides of that happening, where you get lower demand, less sales, and you're going to get margin compression. Right. Some people may look at that and say, okay, well, that's going to give us a good long-term buying opportunity, right? That plays right into Cem's concept of a prolonged bear market. That's going to be painful for a lot of us who haven't experienced that. You know, I think a giant cohort of the people who are actively trading this market are younger, right? You have a lot of these Wall Street bets types. I know a lot of folks in our room are younger. We definitely have some veterans in the game over there on that side, but you know, they're not experienced with these bear markets. And Jay's told us that for what feels like years, when he would talk about, you know, the .com blow up and the 2008 CFD crisis. Like that was a different era that most of us never experienced. We weren't, we were kids, you know, we weren't even playing the game at that time.
Yeah. And I think what they're both really driving at, or at least I wouldn't say necessarily Jay, because Jay's trading in his own way, and he's looking a lot more at the Fed now, given that like a lot of his signals are like completely squashed out. But what I think Cem and Charlie and Miguel Elliott are kind of driving at is it's not going to be one big event that causes any of this, right? It's basically like a shift in structure, right, across the board from like a macro perspective and all these layers. Like the pricing in a potential for less rate cuts, even though, you know, Trump is demanding it. Right, there's definitely some pricing in of, is Powell going to be here? You know, I think on top of that too, Powell and Trump are playing chicken with each other, which I've been saying for a month now. You know, is stickier inflation, right? Is it going to go away? Is it going to stay? Fed bailouts, right? Depending on what happens, like there's so many other things to kind of put into this from a structure standpoint, and that I think that's why we're going to be in a new environment. So as like a trader, what's what I find the most interesting is what I've been nerding out on, I think is going to become, and I love that Cem said this because I've been thinking it, but he said it too, is what people should probably start focusing on a bit more. And that is dealer positioning and gamma and readjustments of gamma because of how volatile things are, especially in this negative environment and how much they have to hedge, right? So, he was basically driving at Cem, and so is McElligott too. McElligott put a floor. He goes, I don't think we get below 20 VIX for a long time, but he actually sees us as a high 20 VIX, low 30 VIX. Cem said the same thing. He goes, volatility is no longer the surprise. It's the new environment. That's just what you're in.
Right.
And he talked about a scenario where we do this like 35 to 45% drop, but the VIX doesn't stay above 50 at all during this, right? And basically what he was kind of driving at is you might have like a lower implied volatility, but massive realized fall during all of this. And, he's basically just don't expect, VIX spikes to tell you that there's going to be a problem. Or for me, like, I look at the TDEX a lot, like TDEX didn't do shit for most of this drop outside of when there was a little bit more, right? And that's what I look at for basically like left tail type risk.
Right. When the market's actually in turmoil. Exactly.
Yeah. Basically he was saying like danger's here. It's already baked in. Just get used to it.
Right. And this, I learned this many years ago from Keith McCullough over at Hedgeye. And he's got a great saying that's volatility is episodic and non-trending. Well, go read a nice book on volatility, and we can throw a link in the description to that. But, in that lens, the episode can last a whole lot longer than people think, right? Because in the fractal nature of time, a year isn't that long in the grand scheme of a 30-year period. So if you get that extended episode, right, that's lasting high volatility, it seems like torture for those of us who are in here every day trying to make heads or tails of where the market's going. But in the grand scheme of things, if it allows the market to really wash out and we get the 35, peak to trough sell-off, that's pretty standard for bear markets. If not, the bear market can get worse, So that's something else to keep in mind, is that this could just be an episode that's a lot longer than we thought. You thought you sat down for a half-hour TV show. Turns out it's a 3-hour movie. You better strap the fuck in and get used to the new environment. And it's taken me a little bit of getting used to, right? We were so complacent for so many years. I think new administration has brought the new regime. And we didn't really see that with Biden, right? I don't know if it was the Fed put that was keeping us subdued. Maybe there was a little bit of, insiders in Congress who wanted to make sure the market just went up for the election. But either which way, we had it easy. And you see it in the chart. And like you had mentioned, the run from the October 22 lows to the highs was pretty absurd, And that was what? We're still up right now, just for perspective, right? We are still up 46% from those October 22 lows. So in the grand scheme of things, life's not that bad. It feels like it, right? And if you got caught up in this, or if you're just, levered long, you're blown out here. But the name of the game when this shit happens is capital preservation, and keep your seat at the table. And you'll probably you've heard me say it, and you're going to hear me say that shit again. Because I don't want to see you guys lose your table.
Right.
Or your house, or, everything.
Yeah. And I think that's what's important, right? Like,
right.
I think it's really important for people to understand if this is a complete, regime change or a new market dynamic that, what you've learned in the last 2 years, there's value to, but you can't be stuck. You have to trade what the market starts doing, right? Because there's still a lot of money to be made. And again, a lot of people will hate on 0DTs or scalping and all of that. But if you know what you're doing, there's a shit ton of money to be made in this volatility, or even 1 to 2 day swings, or stock picking, right? There are names that are going to do well even when this market sucks, right? Like a Walmart, or a McDonald's, right? Those typically can kind of hold up in these types of markets, and you can watch flow there. Or, with earnings, there's a whole nother thing with earning. But what was interesting, another thing that Cem pointed out, that I was obviously not alive for, neither were you, was the market from 1968 to 1982 and how the market went nowhere. for 14 years. 14 years. So and then he like pointed out, like during that time, given inflation, technically the market lost 67% of its value while sitting sideways.
Right.
And he wasn't trying to fearmonger. I think what he's really driving at is trying to say, hey, you're not used to this, right? This could be much worse than you think because of over-evaluations, different way that the market's going on, the macro shift in the environment, Trump tariffs, whatever the hell you want to call it. Like all these things kind of working together, like the structure of all of it changing and being like, hey, this isn't just a buy the dip moment. You're going to get destroyed. But from an investor standpoint, people that are young, and if you have cash, it doesn't mean that you can't. Like I literally buy the S&P 500 every single, I think, Monday. Every Monday, I buy some. It automatically buys it for me. I don't really care what the price is. I don't give a shit because all I care about is what happens over the next 40 years. So for me, I'm getting my average cost basis down, and it is what it is. Like that's totally different than trading this, or people are playing options for us to go somewhere in the next 3 months. So I thought that was an interesting kind of note from him. And then after that, he really harped on dealer positioning, which I really liked. And if anybody has the chance, the podcast was excellent. I forget who he was on with. I'll find the name of it, but it was really good. And Smiddy knows this. I love dealer positioning. I am a big fucking gamma nerd. And it's helped me a lot. It's really helped me navigate this environment if you kind of understand it. So I would highly recommend, those that don't know what that is to go and learn it, either from people in our room, someone like me, or, elsewhere. I'm sure that we'll do a video on this because it's coming more and more relevant now, or prevalent now. So, it's just, it's cool.
Yeah. Maybe next week, next recording, we'll touch a little more on that and kind of break it into that, explain that a little more to people.
Yeah. And I think,
and it is something we use every day in the room as well. So we have tools that, Joe and the guys have done a great job at building that we execute on every single day on the 0-day basis. So it is, and it works. It works pretty well. That was the trade that Joe nailed today. I called it out and was arguing with some folks at a call center. So I missed that trade. Real happy about that one, but you do that sometimes.
And I think you're right though. It's something that we're trying to help people visualize more. It's not a perfect science. There's a lot of interpretation. You're looking for areas where dealers have to hedge. So like large areas of gamma. And I won't do a whole lesson on this, but we will maybe next episode because it was on the docket, but just a nice little piece for everyone here is no one ever explains gamma right for the most part because it gets to be complex. But if you can understand a very simple, like I guess, anecdote or a way of explaining this, I tell everyone to look at it in 3D, right? So think of positive gamma areas, like the largest ones. Like let's say this is the largest on a certain strike, right? I'll use a random name here. Or actually, I could probably fucking run one right now. I can run the code and we can actually do like a decent example. But let's just do this let's do Meta. I'll do an example of this on Meta because it's easier to explain. Now, I use gamma primarily, just so everyone knows, on SPX, right? SPX is primarily what I use. I don't like Meta's chart. That's so bad. It hasn't reran. We dumped today, so it's tough. But okay, I'll just use an example. The numbers really don't matter. Think of the most positive node, what we call a call wall, as a mountain top, your peak. It's like the top of Mount Everest. And then I want you to think of the most negative gamma area, so like your put wall, right? Because that's the largest, most negative gamma area, as like the bottom of the Grand Canyon, right? The lowest part of a valley. And all in between them, you'll have these different areas of gamma, and the notional of that gamma determines the height of it. So if it's like half of what the call wall is, we'll call that a small little hill, right? If it's, half of what the put wall is, it's a small little, as you're running down, it's a small little area of interest, or maybe a small little hill that stops it from, being a straight downfall. And then all you have to think about is running. You are a spot price more so than anything as it's running. So if you are a person and you're running, when you start running up a hill, Does it get slower or faster? You get slower. That's dealer hedging dynamics right there in a positive gamma environment, because in a positive environment, dealers are trading against price. So you get good environments, you get non-volatile environments, you get a structured environment. So they're going to sell futures as the price is running up. So harder to run up to a mountaintop. Then when you get to the peak, we like to call those areas of resistance, right? To get over that peak, like to get over that hump. Now think of it on the opposite end. If you're in a negative gamma environment and dealers are trading against or with price, I should say, then as futures sell off, they're now selling futures too, which gives you these exaggerated moves. And think about it as running downhill. Is it easier to run downhill or run uphill? Easier to run downhill. That's it. That is the easiest explanation. And then when you get to like the bottom of that valley or the bottom of that pit on a put wall, you expect a potential bounce off of it, right? So that's all we do. And we're trying to visualize with the lines. But if you can't understand that portion of it, it's different. And gamma is really an object of speed and how much they have to hedge. So we can go more in depth on that, but it just makes it easier for people to kind of visualize. And, you know, again, there's also environments where you have a call wall, but you're in a negative gamma environment. So there's some nuance. But if you could just think of it like that, it's usually enough for people to be dangerous, right? As long as you understand how big the levels are, right? Like if it's a small valley, don't really matter. If it's a small mountain peak, doesn't really matter, right? It's you know, you're coin flipping what's gamma. But if it's large, then you have twofold, right? And today was that example. We had a large gamma node at 5,200. Price went below it. We actually didn't bounce. I played the bounce and I lost. I'll call my loser. But what happened after that? Now they're hedging against all of that fucking downhill. And what happened? We just exaggerated the move and kept going lower and kept going lower. Oh, another 100 points lower to get to the next kind of gamma node. And that gamma node wasn't just a longer term one. It was also the 0 DT like level. And gamma can also act as a magnet and all this stuff. But anyways, we'll do another. That's for another day. Smiddy is like, you're boring me already. No, I'm just kidding.
No, I love it, man.
It's something that I've explained. Like he's probably heard me explain like 20 times. So we'll pause there. But
we've been through this. We've been through this ad nauseum over here, which again I enjoy. Right, these are the little things that then when you go listen to the really smart guys, it adds more to your tool belt.
Yeah.
So when you come in the next day, you're like, oh, I see what's going on. That's the whole thing. You know?
I am by no means like one of those like brilliant people that really understand these dynamics. I know enough to be dangerous, but I still go and listen to them. Like a McGilligan, a Cem. You know, when Goldman Sachs posts their stuff about gamma, like these guys know this shit way better. And again, I'm using information that I'm given. True dealer positioning it's never going to be perfect to true dealer positioning. We're guessing on a couple things. So but you know, that's kind of the regime we're in. And if you can understand that, that's where I think you'll be better off when it comes to a lot of this trading. Like technical analysis will still be good, right? You still use your moving averages and your VWAPs, those still work. But you know, what's better? If you get to a VWAP and an area of gamma, like that's a lot more powerful potential play than anything else. So anyways, I digress on that. I thought there was one more thing from Cem that I wanted to talk about. Let me check my notes here. Oh, he made a funny comment that plays into what we were saying about dealer flows. Let me try to find this. He said this, and I'm paraphrasing. He goes, retail is still stuck asking, why is Apple down 3% today? Did they miss earnings? And then he's like, bro, Apple's down because dealers are adjusting gamma exposure, not because of fucking earnings. Like, and again, this was a non-earnings day when he was kind of talking about it, but I just kind of found it funny. Like, he's really saying that this is a full-on structural change to the markets, and like, we're going to be like this for a while, and you guys should, you know, pay attention to it. So, you know, that's the Cem note.
Get comfy.
Yeah, get comfy is right. Volatility is going to be here. It's not going anywhere. You know, that being said, Smid, I mean, we don't call bottoms, we don't call tops, but like, you know, where's your bias lying right now, given everything you're seeing?
Man, I want to go shopping. I really do. In hindsight, you know, I'm keeping it really tight. I'm playing a lot smaller than I normally would. So, you know, if we were going to buy 500 contracts of the Qs for tomorrow, I'm buying 100, right? And just playing it there. And then when I win, I'm happy. And if I lose, you know, we come back again and we can do it again tomorrow. But sizing down, you know, part of our strategy over here, the way that we shoot is we shoot pretty big when we go for things. So sizing that back, you know, convincing my partner like, hey, you know, we're not going full port long meta here at, you know, 515, which we did, and you know, got smacked. So trying to tone it down, right? I've got to do a little damage control here and make sure that at the end of the year we're not down, you know, 25% or something crazy. So like I said, I've got work to do, but I'm taking it slow. I'd like to go shopping. I want to buy quality. Something I ran a screener today, and it looks like, you know, it's kind of the recession play, right? They're buying banks, they're buying consumer discretionary shit, and you know, and the names they're buying are Kroger, Kraft Heinz, like you said, McDonald's. You know, things that Mondelez, things that people are going to continue buying. We got Dollar Tree, and I think Dollar General both did well today, right? Some of the green names in the S&P. So people are going to mean revert back to buying the things that when money gets tight, people continue shopping, right? You still need your medicine, you still need food and beverage, right? And you're going to go to the affordable places to do so. You know, you're probably not going to be buying Moet and Louis Vuitton, right? So maybe those are names you look to short. I probably wouldn't. I think that they'll do okay in this environment. There's still a lot of money floating around. And I actually had a chart of M1 and M2 pulled up earlier, but still a lot of money floating around out there in the grand scheme of everything. That said, you know, a couple things that I had, and this was a joke. You know, we were on the live stream on Friday, and we all kind of watched Lucci go play those degenerate Netflix earnings.
Oh,
and I joked around with everybody, right? And you know, we had some folks asking like, "Why aren't you selling puts or you know, short the company, whatever?" And it's like, look, it's Netflix is tariff proof. It's the entertainment that everyone can afford at home, right? If you got a television and you have I don't know what the subscription is, $15 or whatever a month.
But they up the price on me, and I'm still never gonna get rid of it. I use it way too much.
Yep. And they'll up the price $1 every quarter, and they'll make up for it, right? They'll make up for the margins. So you can't tear off the TV show. That's just the thing. Their product it's intellectual in a way where I don't think that they're going to get hit super hard in this environment that's kind of tough for an actual producer of hard goods, right?
Yeah.
Like a car manufacturer, those guys are looking rough. That said, you know, I think I mentioned this last time. You still can't walk into Porsche and go order a 911. They're going to tell you maybe 2026 you might get lucky, right? To get a base model. You're not even getting fancy over there. So you know, there's a big difference in the haves and have-nots right now when it comes to financial security. And something that I noted, you know, we mentioned it right before this call, but I saw a big thread, and unfortunately I couldn't pull it back up, but the amount of, you know, consumer goods that are being financed on these buy now, pay later programs, right?
Yeah.
It's getting out of control. And then so that led me into I had no idea, you know, Klarna had $8 billion of outstanding, you know, underwrites basically for normal things, people's Uber rides, Nike tennis shoes, things that you just wouldn't expect. You know, you put them on a credit card is one thing. I just wouldn't expect someone to be like, oh, I'm going to break that up into 4 payments, right? $8 billion is a pretty good amount of money. I go look at the consumer credit, right? So between loans, credit cards, and revolving, it's 1.1 trillion. So there's an ungodly amount of outstanding debt in the world. And, you know, that to me, that's concerning, right? But how long do we kick that can down the road? How long can we kick that can down the road? You know, does that bring in easing, right? And you mentioned this, you know, 30 minutes ago or so. Whose hand is going to get forced? Is it going to be Jerome Powell's and he cuts, or is it going to be Trump's and he has to ease up on this? I mean, we're kind of hitting that rock in a hard place, and ultimately the consumer and the producer are the ones who get fucked, and that's hard.
Yeah, I mean, we're still in a headline market. I mean, even for me, right? Like looking at all this, it's really tough to. I mean, again, if we're gonna throw a prediction out there, you know, I'm not excited about anything long term, but that doesn't mean that we can't short term bounce, right? And then rip people's faces off. I think we're in earnings season now, and that'll determine a lot of maybe immediate short term direction. but I still lean bearish, right? For the year at least.
Yeah.
I don't think I lean as far as Cem does. Again, he's way smarter than fucking me, obviously. But I think I was calling to, people in the room originally that I want to see 5,000, and then we got there, right? And we started bouncing, and then I said, okay, for me, like the next area of interest is about like 4,600 to 4,500 on SPX, and I'd be more comfortable in that range, to kind of start, looking. I mean, from a longer term investment perspective, I'm already nibbling now just because I have some cash and I can average more of my shit down if I want to, no big deal. But I'm still trading what's going to happen in the intraday. I think, to your point, we don't know whose hand's going to get forced. We don't know what Trump's policy is really going to be, as much as he has kind of said it. I think right now he's really just trying to strong arm as many people as possible into doing what he wants. And we don't know what's going to happen with all of that. We actually don't know what the impact's going to be, as much as tariff lovers will say it's going to be the greatest thing ever, and tariffs doomsayers are going to say it's the worst thing ever. No one fucking knows. I don't care. And you could source anything. You could cite it. You could call me an idiot. I really don't give a shit. None of you know, because there's so much nuance to it. You could guess, you could play around it for sure. But it's not a perfect science to at all. So, Cem was talking about, we got the first drop, then a bounce attempt, back up to like 5,650, 6,000 SPX. And then mid to late 2000, that's like April, May, like bounced that high, which I think is crazy looking at the chart right now. But hey, what do I know? And then a mid-late 2025, a hard, and he means hard rip in your face to get that. Right. And then you get capitulation into 2026. So, there's... Then you got other people like Tom Lee. I don't know if he's still a bull, but he's probably calling SPX 7,000 by fucking July, knowing that motherfucker.
Yeah, why not? Why not? Just, a little note here. VWAP from 2024, like yearly VWAP, just let it run, is sitting right around 5,500. So again, that would give you a nice bounce there, about a 7% bounce again, and a nice spot to maybe look to reshort again. So, but again, you'd have people caught off sides. You'd have shorts covering, and
absolutely,
it would be it would start to look nice and rosy and optimistic again. Yeah. And then people would be like, "Oh, that was it. That's here we go." And in reality, we're just setting, until we can get a meaningful break up, we're setting lower highs here. So you're kind of fighting against you're fighting against the current, is what I would say. Because this has been going on now. We've been selling for, what is this? 62 days. So, or maybe a little more than that. It's not perfect measurement, but you guys get the idea. This is going on a little bit longer than just the old pullback we were used to that lasted 4 or 5 days, and then we got a continuation.
And I think there are creative ways. Like, again, I'm not trying to be a doomsdayer with what I was talking about with Cem, or that I'm bearish, right? Like, again, you got to remember, I trade intraday, or every or a small 2-day swing, right? I'm playing what I see, like, just like I think you are right now too. So I'm going to play whatever the market decides to give me from a price action standpoint. But that's why I like Gamma, because it gives me the levels that I could potentially see reversal points at, that I have a lot more confidence in, because it is dealer positioning. But McElligott had a note not last week, the week before, that said if you wanted to get some risk, right? Given he said basically puts are they cost an arm and a leg. And even with volatility where it's at right now, calls are relatively cheap, and from a percentile perspective. So if you were going to play them, you could play like a 1 to 2, call spread, or a ratio call spread, and get that longer term exposure that you want on the indexes, SPY, Qs, a certain name. And that's my whole thing. Like, if you need to scratch that itch, I don't hate that personally, right? If you get at a spot, you want to, like, me personally, like, I want to scratch my itch, right? That's why I've been buying equity for the longer investment portfolio. But because I don't know, like, if you could just shoot right back up the highs. But, I don't feel comfortable given where we're at to really do it. So if I did it, I would have to, definitely play that type of, spread in order to kind of limit.
A defensive, almost a defensive long. Exactly.
Yeah, exactly.
You got to be tactical. Yeah. And one last thing to kind of wrap this, I guess as I was going through today, checking the shopping list, saying you want some quality, you want to buy some Mag 7, everything outside of Netflix is getting to a point that looks like if it breaks from here, considering how much these guys contribute to the indices, these things could drag this way down. And if you go look at, NASDAQ, SPX, they've got a little ways to go before they hit those lows that they were at, 2 weeks ago. But that could come very quickly. The next, SPX to get to those lows is only 6-7%. That could be 2 more days of selling, and we're there.
Yep.
I don't think the little companies, if you look at Breath today, it was pretty abysmal.
Nope, 90% at one point. The 90% down day.
If people don't show up to buy, then this just gets worse. And, and then you get and then you start getting the margin calls, and that's when it gets wacky. So, again, good environment for traders like you and I who are going to say, all right, I'll short this, or I'll buy a handful of puts. And we've already got some folks we trade with who are, loading that ship up and thinking next week is like, this is the week that happens. I'm short into next week. But that's something I'm keeping an eye on. Cause again, the shopping list, for me, the Meta, Oracle, I'd love to get long some Tesla, but they've got earnings tomorrow. And, I think that they're struggling. I think all car companies are struggling, but I think that they're in with the amount of backlash that Elon Musk is getting, love him or hate him, at the end of the day, it doesn't help sell cars, and that doesn't help your company. And
he's interesting.
Interesting is a way to put it. But yeah, so that'll be telling, because that's going to be one of the first big guys to report, I think, outside of the banks tomorrow. So yeah, keep an eye on that.
Yeah, they got
one.
delivery numbers, right? And then Dan Ives was basically called out Elon and said that he's making irreparable damage to Tesla,
to the brand, right.
because of Doge, and like basically said he needs to step down. And there was rumors circling that he's going to be out of Doge and focus on Tesla. So, that's
right.
I'll just tell you what, that's a name I ain't fucking touching. I'm good.
No.
I'm good. It's there's just way too much. That name in particular has way too much headline risk for me. Personally. So I'm not even. I don't even look at it. Like I have it up on a chart here because I like to keep the big ones to see if they're weighing down on the index, but. It's not something that I'm playing with. But interesting note from Jay, when Jay and I were talking today, we were talking about how low some of these Mag 7 names are going, and like Meta hit a new low below, the last
Monday.
Yeah, like it's that bad day that we had, right? That April 7th, right? It hit a low. Nvidia hasn't yet. It's still got room to go. Microsoft still has room to go. Apple has room to go. Tesla has a little bit of room to go. It kind of got there, right? So
it's pretty much there. Yeah.
Yeah, like we're getting down to that point.
Oracle's
it's more of a decision
too,
time. Yeah, decision time, right? For a lot of this. I mean, we don't know what's going to happen. We'll see. Earnings this week will be, I think, really interesting to see what they do. And, we'll trade what we get. But this is where, depending on who is reporting, if you want to play, you could play some after hour shit with some futures, or, the last 15 minutes with some, SPY puts and calls. And I think a lot of people are going to do that with the volatility that we're kind of expecting, because probably get some cheap lotto tickets on a lot of this. Not really my game, but we'll see. So with that being said, it is time now to bring it to my favorite part of the podcast, as always. And I'm gonna get like a sound thing for this one day, and I'm gonna have to get someone to like say like trade or fade, and like have this whole production, just because I'm a fucking herb and I like it. But we are getting into our favorite segment, trade or fade. For those that have not heard this segment before or are new to the podcast, basically I give Smiddy and myself, or whoever the guest is that's with us, 3 trades from our good. Well, usually it's anybody on Twitter that I find, but lately we've just been doing Mr. Banana Man, Banana Stocks, because he's had some absolutely egregious calls, and he's just a polarizing figure on there, and it's just again, it's for fun. So these are not buy recommendations, they're not sell recommendations. This is purely for entertainment purposes. We need to review our plays from when we did this with Ranch. So when we did this for the first time, I went 0-3, Smiddy went 0-3. So it was a really bad start to this, but a little bit of a turnaround with this last go. So the ones that we played last time about a month ago were Coin, April 4th, 220 calls. Ronch traded it. Smiddy traded it. I faded that some bitch, and I won. That's a dub. It's a dub. Loss for Ronch and Smiddy. Boeing, April 4th, 190 calls. I faded it. Ronch faded it. Smiddy traded it. W. It was a fade, not a trade. Smitty lost again. Poor guy. And then our favorite one, Mobileye. Mobileye, MBLY, April 17th, 19 calls. This guy person also added like 10K shares like 4 or 5 times. I faded it, and Ronch faded it fucking hard. And Smitty said, fuck you guys, I'm trading it because of LiDAR and Tesla and Austin. And it was a fade. It lost. So Smitty moves to 0-6. You might just want to do the opposite of what he says. Just kidding. Don't do that. I don't do that. This is entertainment. This isn't real. I am now 3-3. I went 3-0 this past week. And now we are going to bring it to the next set. Now, today's were harder because the guy that we usually use, Mr. Banana Man, who is going long fucking everything last week, well, his shit's all in the gutter. Like, he was trading Tesla, Amazon, Dell, and all those have gotten fucking smoked. So he hasn't been posting as much. So, Smitty, I have some new ones. Let's see what Smid Dog wants to do on the first one. We have Hood. And just so everyone knows, he doesn't know this ahead of time. I literally pull these right before we start the podcast, so I can't go analyze a chart. So these are gut reactions to a chart we pull up. And that's it. Smitty, we have Hood, May 2nd, 43 calls.
May 2nd? How expensive are those boys? 43s?
So May 2nd's like what? We're recording on the 21st. So that's next Friday.
Yeah. You know, I think cost-wise, they don't look terrible. Literally, I've never traded this name. The chart looks, pretty much like it's going to sell back to 32. I'm going to fade it.
All right. Smitty is going to fade. Let's see. Smitty is fading this. Here's where I'm torn. Is I personally I gotta be careful. I don't like the CEO of Robinhood after all the GameStop shenanigans he did. I think Robinhood as a company actually does a lot of things right from a tech platform perspective, and their new gold is good, and they're doing a lot of things, but they're still really catering towards, the basic non-everyday trader. And there's probably people that listen to this that are on Robinhood, and I'm not dogging it. I think their new gold platform is actually really good. They have a sleek mobile app. I'm more of a Webull stan, so at least from a mobile perspective. But Bitcoin was crazy today, and I'm not saying that they follow Bitcoin. Okay, I know that this isn't an MSTR, but Coinbase also had a headline that said that some people are unable to do shit when it comes to depositing money through something. And I don't know. The chart looks like shit, but it's kind of in this area of consolidation. 43 is not that far off. I'm going to trade it. And again, I think does this catch earnings? This does.
It does
catch earnings.
Yep.
Okay, so I'm going to trade this one. This is basically an earnings, play, which I hate earnings plays. I'm going to trade.
They did have a nice beat last time. They had a nice beat and it gapped pretty hard.
They just have a lot. They came out with a lot of new stuff. Gold came out in the last quarter. Again, the indexes could destroy this thing, but since it catches earnings, I'll roll the dice and I'll trade it. Next one. Fuck this name. Can't believe that I actually have to do this. It is Palantir, PLTR. I'm going to go first. May 9th. So this is a little bit more time, but how we do this is it's come recording date. So just because it expos on May 9th, when we come record May 5th or 6th, that's when we're judging these. May 9th, 100 calls. Puts it basically right towards the bottom of that gap. I don't know why anybody owns this colossal piece of shit. So yeah, fading it. Just this name can absolutely blow me on every level. I am not a Palantir fan. I think that they fluff a lot of shit. Yeah, not my cup of tea. So I'm gonna fade PLTR. Smid Dog, what do you think?
Dude, I like it. I mean, we were long this thing for a while, caught a nice run in it, and then actually got short around 110. I think I lost about $3 a share. Kept it pretty tight. It was only 10,000 shares, so it wasn't too brutal. But I think that this actually
what is it trading on earnings?
Some flow today.
What's its PE ratio? What is it trading forward earnings? Go ahead.
Oh God, probably it's probably 700 or something. Yeah, probably
exactly.
700. Yeah, exactly.
Nobody cares though. Like nobody cares. That's why I hate it. But anyways, go ahead.
Nobody cares. It's got AI military tech.
Yeah,
everyone knows.
Yeah.
That's fine. No, so they did get some bullish sweeps today and some decent, April 25s for 100, 101, 51 and 130K. So there was definitely some action in that today. I think it closed red if I'm not mistaken, but I have a hard time fading it because it's one of those that it doesn't trade rationally, right? You could look at every metric and what they're doing, and it's like, it's kind of pie in the sky shit. But I'll trade that one. I'll take the opposite of you, dude. I'm trading it.
All right, so now we're battling again on this. We're battling. And this happened the last time, right? The last time we both took the opposite of each other, which is great because I want to be honest. When we first started doing this, I kept thinking that we were going to be like the exact same on everything. But okay, I like it. The last one, and I gotta go grab this one is.
And what are those? Those are trading, just so we have it kind of written down, 475 by 490 at the close here. So just so we can keep track of where they actually finish, come the next recording.
Got you. The last one that we'll do, and this is kind of, actually, you know what? I can't do it because it's kind of unfair. Like it's dropped $20 since this guy took the trade. We'll change it. We're gonna go to. There is no actual option. We're gonna play just off a price. Someone he said Netflix is going to 1045. So we'll say 1045 on Netflix, which isn't crazy. By the time that we record next. So 1045 on Netflix. What do you think?
We need to get there.
So it peaked after any after hours trading, got pretty high. I think it got up to like 1020, right, when we were watching it after earnings on that past Thursday. And we talked about it today, right? It's a tariff proof name. So what are you thinking?
Right. I think it actually in the next couple of weeks probably heads back towards 930, especially if we don't get some big upside here. I'm going to go ahead and be that guy who says they priced it in. I'm fading that.
Smiddy is going to fade Netflix getting to 1045. And I'm going to second you. I actually agree with you on this. I'm fading it. I'm with you on how it is. Like given what it did now post earnings, and it basically just erased majority of its movement. It was only up 1.5% today post earnings. I'm with you, and I think there's just too much weighing on the indexes across the board. Even though this was, think about today, everything got weighed down. This thing could barely keep its head above water. So, I am gonna fade that bad boy.
Yep, and just another thought here, kind of to wrap it all up, that gets it back to the gap fill from Tuesday the 15th. So, last week it basically gapped up on Tuesday and kind of held that for the week, but I think we could see that, within the week if we continue selling across the board. So they will take their profit out of the winners, and that thing will sink back.
I got you. I'm with you. I agree. It looks like he traded the 1020 calls for June, so he actually got paid on that shit. Interesting. Well, maybe he got paid. It kind of died. Who knows when he got out? Anyways, it doesn't really matter. So that is Trader Fade. To just so everyone has it, we have Hood May 2nd, 43 calls. I am trading. Smiddy is fading. We have PLT May 9th, 100 calls. I am fading. Smiddy is trading. And then we have the Netflix to 1045. I am fading it, and Smiddy is also fading it. So Smiddy needs some luck here. You know, he's 0 for 6. 0 for 6. I'm 3 and 3. We're going to see if we can keep that luck trains going. Ranch, I think Ranch is like our guest. He's at 1. Where'd he go? 1 and 2, I think. I think he only got 1 right. Because I discovered maybe he got 2 right. I don't know. It really doesn't matter.
He got 2. Yeah, he got 2.
He only traded 1. They were all fades because the market took a massive shit, which we are all for.
He knew. Yep. He was in on it, dude. That was a good one, man. Maybe we'll have him back. Maybe we'll get Lucci on here soon. And
so we are. So we are. We are going to get Lucci on. I don't know how we're going to do it yet. Lucci's going to come on and we're going to talk about his big day, his $1.6 million, 2-day run. That's the biggest I think he's had in quite some time. So, and for those that don't know Lucci is the most transparent person you'll ever meet when you're trading. He literally has YouTube videos out showing $2 million losses like in a month while he's walking around on a beach. Like, you'll never find someone more transparent than him. But he's been catching fire, doing a lot more of the 0 DTs, doing more swing short. He caught a lot of that dump on a put side, and he fucking held it like a champion. And this is the environment he's good in, right? Like these bear markets or the downside, he's like me. We get a little chubby, for being able to short shit, and when everyone else is crying and we're making money. A lot tougher the last 2 years to be a bear for sure. But he finally got the market he wants. So we'll get him on here, I think, sooner rather than later. Like, we might actually schedule it for end of this week.
Okay. I'm game.
Do it.
I will be.
Yeah,
around.
It'll be dope. Yeah. I think he'll like it. I think it'll be fun to get him on here and we can, riff about everything that he's doing. We put out a nice YouTube video on 0 DTs and kind of why he's been, flipping to them. These guys have their own strategy inside the new 0-day room that they've been doing, and they've been doing really well. Like, this volatility has really helped as long as you got clear, defined areas of interest. And it's good. And I think he's actually hosting an event this weekend out in Puerto Rico too. So busy man. I'll try to get him on here. I know people want to see more of him, and then we'll get Jay. We'll get Jay probably in the next month or two to come back on and talk some shop, with us and kind of see, where things are going. And then I have a couple more interviews in the pipeline. So we're going to go back to doing a couple more interviews with non-STEAMROOM people. I've been reaching out to others that I would love to talk to, and I know you would love to talk to. And we'll see what they say, right? I would love to get Cem on here. Like, that's my number one, like, wish list guest. But that's, he follows us, which is what matters. So we'll see. Maybe we'll get him on there, and then we'll get some more STEAMROOM people in here. We got a lot of big hitters in the room that I think you guys would find interesting, like people that run some massive books like Smiddy does. So all good shit. But Smiddy, you got anything else?
No, that's pretty much it for me, man. I'm going to go enjoy some of this nice weather and relax for a little bit, get ready for tomorrow. Very,
very nice. All right. Well, thank you everybody for listening. Make sure you like, subscribe, give us 5 stars on wherever you're listening to the podcast. We greatly appreciate it. We will be back now, hopefully on a regular cadence. Now that I do have another like weekend getaway that I'm going to, but hopefully that we'll plan around that. We'll be back recording, I think, April 5th again, or May 5th, not April 5th. And yeah, thank you guys for listening. We'll catch you on the next one.